Everybody, it's Kimosabe here giving you another update. I am seeing some very, very promising setups coming in the future. Nothing is for certain, but the market does what it does. But I am seeing how this on a daily chart, just the candle closes. Look at how those match in reverse. And that kind of makes me think that this leg could now be matching this leg. Originally, I was thinking this leg was matching that leg, but that ended up not coming to fruition as we broke the low. But now we have something that's very promising there that looks like that could be matching. So we will take some measurements afterwards and try to confirm that. So where's the opportunity here? Well, we have, of course, the lower lows, lower highs, lower lows, lower highs and lower lows again. So where would we be looking for a supply to come in? Right around here. Maybe even right where we're at. That would be showing a little bit of weakness, but it's acceptable. So we had this chop and down. Look at this little space underneath here. And that's where this price kind of was hanging out. So maybe we get this little choppy here, and we're going to hang out underneath that space for a little bit, get a rejection. That's where I would expect supply to come in if it does, but it certainly doesn't have to. But the patterns just seem to be mimicking that way, where you have this area right under here, danced around it. Now we have this area down here, danced around it. Then we have this area right here. Maybe we'll dance around that. We'll see what price action ends up doing. But it should be very interesting how the legs could match. So in the previous video, I stated that this low could be the bottom of a potential Elliott wave 4 because it came to a 0.382 retrace of wave 3 in log scale and a 0.5 retrace in linear scale of that proposed third wave. So it's looking promising in that regards. So if price is to break to the upside and this leg is to match this, what would that end up looking like? Well, first things first, we will get ourselves a measuring tool of the trend-based fib extension, and we will measure this leg. And we can measure it on closures and see the closing price to closing price, and then project from this closing price and see where price may end up getting up to for that daily leg to measure properly. You'd be above 62, but under 64. So maybe we get a wick into there, and that's all you get, mimicking this wick over here if those are going to match in reverse. But it all depends on how the market wants to play. If we drag this down and actually measure the wicks, include the wicks in there, and then project from this lower wick over here, we're already hitting the 1-to-1 fib extension of that. So as of right now, that leg matches this leg, and it will match it without going above 70,000. So if supply does come in here and it decides to retrace down, that is the invalidation for those legs matching, and it'll just continue going. And that's acceptable too. I just have to find another entry. But if this leg over here does indeed match what we're doing here, then we would expect the previous leg to come down, giving you a really, really good buy setup. So what would that look like? And for that, we would take another trend-based fib extension and measure. We can measure the closes depending on where today's day closes, but we could just measure that red leg down there and project from wherever this closure happens for the day, assuming it closes right where it's at. That would give a matching leg closure on closing price down to the 1-to-1 56,891 to 55,800. And that would look like a decent area for a buy setup, stop loss at the low. Now that's a daily candle closing price. The wicks can go as far as they want to go. If we are to measure this previous leg wick to wick, if it really wants to have a strong move down, and today does not go any higher, that brings the buy setup down to 52,000. But if we do get up into this space that I was talking about just a second ago, and maybe that ends up being the high, then your 1-to-1 fib extension is 53.5. So it really depends on how high up this gets to initiate the buy setup down there, if we even get a retrade. Assuming supply does come in, like right up here where this high ended up happening, maybe this gets up to here, you have a similar spot. So then you would have this leg come down pretty sharply back to previous support. Now we do not have any higher high closures on this time frame. The 4-hour is, I think, arguable at this point, but from a daily candle perspective, we don't yet have a higher high, which maybe that is the intention of how this leg came down, to not give a really nice buy setup. The market likes to do that. So matching that leg down, assuming it's from this area, comes down to right there. What do we expect? We would expect the following leg to match. And this is the same buy setup I was anticipating a few weeks ago to come off of this leg. So if at first you don't succeed, try again. So maybe this comes up here and dances right there, then breaks out, and then dances around a little bit before continuing. So that's my idea for the buy setup. Just buying previous support. If this came up, maybe comes back down, back test that to see if it's support again. What was once support could remain support and be support again after wicking through its swing failure pattern, back test. Then you have your show of strength up here, and then you enter markup phase. How high of a markup phase? Well, let's take another trend-based fib extension and we'll measure this. Now for these targets, I would definitely like to use closing price because it definitely makes sense. And then I'll project from the wick just to get a conservative target if that ends up playing out. If this trade setup plays out, looking at 90,000 before repeating this section here and then pushing higher, maybe getting that leg and getting crazy up to 141 to 189 could be the target. Initial take profits, if this is going to be like a wave 5 up, you got a 94,000 at 618 of wave 1 plus 3. Here's your 4. That could be a wave 3 in its completion. So then you would have wave 1, 2, that's 3, comes down for 4 again, and then pushes up. It really depends on what the market needs to do to get enough liquidity to go up. But that's my initial thought on the trade setup, to take it at previous support and take it up. I am already long from smaller time frames trade setups that I've been posting, but I always lock in some profits on those, so I'm looking for the next opportunity, and that's where I see it. It's basically come over here, chop around, come back down to previous support, and then we can have a resumption of the uptrend if it does indeed want to come up. From a liquidity standpoint, you can see where we swept these lows. We got this liquidity. We got all this liquidity multiple times. So it's definitely building into, even if this is a distribution, you still have to upthrust to grab this liquidity before reversing. So it's very likely that we will get this liquidity somehow, some way. Doesn't have to happen immediately. But this being my invalidation here at the low, the idea is all the liquidity was taken. We back tested this wick where you had selling come in from the ETF launch, and now the market makers have come back to reverse any positions there, because if they sold heavily on that launch, they would be in a sell position, maybe predominantly sell position. So now that market ended up going bullish, the market maker had to somehow get back down here to reverse his position from there in order to carry on upward. Whether or not that's true, I can't really say, but that's my working thesis on working on these liquidity zones and why price moves the way it moves. So since liquidity was taken here, any break below this liquidity, and the market is going to be hunting these liquidities here at least, and maybe all the way down to here, which would give you the 30,000 back test. So that's what I would see if we break that low. Even on a wick, I mean, it would I think it would screw over a lot of traders who just wick it down there just to stop them out again and then take the all-time high. If that does happen and we don't get a strong continuation down, then we'd have to look for other entries to get long again, or just look for the continued sell setup. But there shouldn't be any reason that the market would want to go below this wick unless if it was searching out this liquidity. That's my opinion. So plenty of liquidity above. Let's go hunt that out. And if we do take that upper liquidity, come back down, you could try to sell that, and that would be your stop loss. But certainly any break above that, and you're going into price discovery, because after you take the liquidity with that push higher, and you come back down and break it again, there's no more liquidity up here. You're in price discovery. So price can either just continue breaking out, or it can back test aggressively and then break out. But any break above a liquidity grab, and I would say stay long. There's no more reason to be short. That could be a swing failure pattern for sure. If the market decides to come up here for one more leg and then reject down, closing below here, then it would find that as resistance, and then you enter a markdown phase. And this was a distribution. That's an upthrust after distribution, and then you enter markdown phase after your last point of supply. Now I have a chart of the S&P 500 index versus the Bitcoin futures. And I have them pretty well lined up, so that kind of lines up with what we got going there. So the line should remain steady all the way through since the lows. As you can see up top, the S&P 500 index did bottom a little bit before the Bitcoin did. Bitcoin came, what, a month later? Yeah, 1 month later. So since it bottomed a month later, maybe we top a month later, and the S&P 500 did actually top, and we're about to go down, and then Bitcoin can follow in a month from now, or a month from the peak that was the 15th of July. So that would equal, we don't have much time left. We'll see. But I did notice that how the sell-off came right where those lines are on the 22nd of August. First sell down on the S&P 500 ended up being one of the bottoms before a nice expansion on Bitcoin, and the S&P 500 continued down until Bitcoin broke the highs. So that could be matching up again. We will see. Certainly a possibility. I don't know if it'll hold. It's just something that I noticed that I wanted to point out. And after the Bitcoin peak here on the 14th of March, you had a little pull down in the S&P 500, and then new all-time highs on the S&P 500, whereas Bitcoin was just continuing down. So both of these charts could be very bullish, or they could be showing a decoupling, a major decoupling for future trading. As I was kind of saying on Bitcoin, this could be a wave 4 completed, and we're about to do a wave 5, and it could be a very extended wave 5. But the same thing goes for this S&P. This could be also a wave 4, and you have some kind of 1, 2, that's 3, 4, and then 5, and then that completes. So maybe these complete a wave 5 together, or they're decoupling and the S&P can continue lower. So far this S&P is about to invalidate my sell setup, because I would be matching that leg with that leg at the 1-to-1. So as soon as that breaks, that would initiate a buy setup for a bounce and potentially new all-time highs, which would look like a breakout back test, and then take that high again. Whereas Bitcoin, I think, it's set up potentially way more bullishly. Could just have some kind of ABC here. A, this is B, and this is C right here, and then this is the middle, like a B wave. Then you're just going to have A, B, and C. Target is 99K, I do believe, like just under 100, with a maximum of 105, I do believe. If that is the count, then you just have a series of ABCs. Well, we'll see. But yeah, these charts, I mean, I've been tracking that like that. And we have some kind of ABC, and then one more push. That's kind of the way I'm tracking it. Certainly doesn't have to play out like that, as some of the charts look to be already topped out, but we'll see what the index wants to do. I guess we'll just have to take it as it goes, and take the setups when they're available, when they're clear, when we have clear invalidation, and see if it goes. If we have sell setups, take the sell setups. If you have the buy setups, take the buy setups. Depends on if you're bullish or bearish. The market can go either way. This is a market, and different people interpret it differently. On this CME chart, we're currently looking at filling that gap. Some may see that as final liquidity, and then it just drops from there. Some people could be interpreting that, and they want this liquidity down here. That is totally possible. I would see that any break below that wick, I'm right on board with you. However, the setup that I was seeing is this being a correction, this coming out, back test, and breakout. So we'll see what they want to do with it. These markets are controlled by whoever is providing the liquidity. So we'll see. Either side can make their case. Below that wick, I say down. Above that wick, I say up. Till then, the range isn't really broken. So hopefully that was helpful for anybody watching this. Ask questions in the comments below. Like and subscribe. Share the video if it was helpful. Do your worst.